All right, perfect. All right, Mark, can you bring the agenda back up for me? My bad. I think I took it down. But yeah, so the first thing we're going to talk about is day trading versus swing trading. Um, I'll show you more examples of like when you should day trade versus when you should swing trade. I think a lot of people get those two confused. Again, I've had people ask me like, well, I've been charting out this stock for a week and I'm trying to find a great entry and I'm looking at the 5-minute chart, but I can never call it right. And it's like, well, if you're swing trading a stock, um, but you're planning on day trading, you have to know which time frame to be on. So looking at the 5-minute for a swing trade is not going to help you. But looking at the month chart for a day trade won't help you. That's too far out. So I'll show you the different setups that I like to use for day trading and swing trading. If you have any questions, you can let me know then. The next thing that we'll do is we'll go over any picks that you all have. So if you have any picks, just go ahead and drop them in the chat, and then Mark will be able to cover those picks at that time. And then after Mark cover you all's picks, I'll have my own picks that we'll be talking about that I'm looking at for the week, or that I, or that I posted last week in the Discord. I think I have a few that I want to continue to watch this week. I know we jumped into I want to say I grabbed Transmedics last week for a move to the upside. So we'll look at that and a few other picks of mine. And then if we have time at the end, we can also do the pattern of the week. And then if anyone's interested in joining the Discord or just seeing what we have in the Discord, we can give you a demo at that time. So again, if you have any questions, use the raise your hand button at the bottom of your screen or put your question in the chat. All right. Thanks, Mark. Cool. All right. Let me share my screen. All right. Let's look at the economic calendar first just to see what major or non-major roadblocks we'll have in the way. So the first thing I want to do is go to calendar, or calendars is right here, then economic. We don't want to look at the 9th. We want to look at the 16th through the 22nd. That's this week. And then, of course, you want to make sure that you turn on this all importance. But if you turn it off, you're going to see a lot of clutter, which it's not necessary. But these, when you turn this on, it's going to show you the market drivers for the most part. So Monday, nothing major. Tuesday, we do have retail sales, which I don't think that retail sales at this point is going to drive the Fed's decision unless we see something that's an outlier, right? Unless we see a number that's astronomically high or astronomically low, then I say astronomically low or low, then it'll cause a shakeup in the market. But I don't think that's going to happen. Wednesday is a special day because we do have the Feds speaking, and it is also my birthday. So great time, that's a good birthday, a good early birthday present for me is figuring out that the Feds are going to be speaking on my birthday while I'm in trade. So it's going to be interesting. But we do have the building permits preliminary, which that's not going to be the star of the day. The star of the day is going to be the Feds and hearing how much of an interest rate cut we're going to get. We know we're going to get a cut, how much, and then like what is the plan moving forward? So do we get one every single meeting moving forward? Are we going to get one every other meeting? And then how deep are these cuts going to be? It's going to be very interesting to see what they come up with. But it's looking like a 0.25 to a 0.5 rate cut. It's pretty much the general consensus. So shouldn't be too much shakeup in the market when it comes to figuring out that. Thursday, we don't have anything major, but Thursday we do have job reports that always comes out. Friday, we don't have anything major as well. So circle this one on the calendar, Wednesday, the 18th, because it's my birthday. And then secondly, because the Feds are going to start, this is the first cut in our interest rate cut cycle. So interesting to see. But do I have any questions? And this one is pretty straightforward. Nothing major until Wednesday, it seems. Cool. All right. Where is my, here's my keyboard. Sorry. I just came back from a real estate meeting, so I'm a little discombobulated, but Should be a-okay. All right. Let's talk about day trading versus swing trading, right? Let's start with a bear chart. Let's strip everything off of this because we're going to use the SPY for a few things. All right. First, let's talk about day trading, right? What is day trading? So day trading is pretty much a trade that happens in the same day. Generally, a day trade, the time frame for it is normally anywhere between 30, it could be 10 minutes, but normally I like to say 30 minutes to about 4 hours. After 4 hours, I mean, you still can sell in the day, but due to the fact of the way that we buy contracts for day trades, that contract after 4 hours could be on a decline as far as time decay. So I like to generally say if you're in and out in 30 minutes to 4 hours, nice day trade. After 4 hours, again, still a day trade, but Ladarius's definition is slightly different because time decay is going to be on fire, especially if you're holding contracts that expire that same day. All right. So we're looking at, if we're fishing for a day trade, the first thing that I like to do is find my time frames, right? So for me, day trading, you need multi-time frame analysis. Multi-time frame analysis means that you're not just going to solely make a decision off of one time frame. So we're looking at the weekly right now, way too high for a day trade. Let's go down to the 5 minute, right? So you're going to pick your time frames. Again, you want to know what's going to happen at most for the first hour, right? So let's say if we're going into the ideal day trade. The ideal day trade for me would be trading the SPY. And the reason why I would day trade the SPY is because the SPY has contracts that expire every single day. Some stocks that you may want to day trade may not have contracts that expire as frequently, right? You may look at a stock and the next contract that you want to buy expires October 18th, right? And that's way too far out for a day trade. Could you day trade the contract? Sure, but that's not ideal when it comes to day trading. You don't want a contract that expires, a month out if you're just looking to get in and get out for 30 minutes to 4 hours. So the SPY, again, ideal for day trades. A lot of contracts, a lot of variation, a lot of different price points too. So if you're coming into day trading and you're like, hey, I only have $100 or I only have $500 that I want to day trade with, the SPY has something for you at varying price points. Now, the risk is a little different. The more money you have, the safer you can play it. The less money you have, the riskier you're going. So if you're buying $100 contracts, you really need to keep an eye on it because with $100 on a day trade, you can, of course, you can do anything just depending on volatility in the market and depending on the stock. But you probably, when you're day trading, you probably at least want 250, maybe to 500, just to be safe and to buy better contracts. All right. So once you figure out how much you want to put into the day trade, you figure out the stock that you want to trade. You also need to know, okay, what time frames am I going to be paying attention to? So for me, I like to do what I would call a 1 to 3. So I like to do look at my time frames in multiples of 3. So I'll look at 3 time frames, but I'll look at the 5-minute, the 15-minute, and then the 45-minute. Right? Let me turn this off. Got extended hours on. That's why. Okay, so the time frames that I like to pay attention to is 5, 15, and 45 on the SPY. So the way that you're going to use these time frames is that you need all 3 of these. You need one as an entry, one as an overall direction, a direction time frame. So normally your higher time frame. So we start at the 45 and we just walk backwards. If you start at the 45-minute, this is your higher time frame. This is where you're going to get the idea of where the market is going, right? So if it's a 45-minute time frame you're watching, really you just want to predict the next 1 or 2 candles, right? You don't, the way that I like to trade, I don't like to predict the next 27 candles. I think that the more candles you try to predict, the more error you're adding into your process, right? So if I'm looking at day trading on the 45-minute, this is my start. I'm looking at, okay, what are the next two candles going to be doing, right? So you may need to look at your other indicators to get an idea of what's happening. You could go ahead and set your support and resistance just to get a feel for some stuff, right? Yeah, that's pretty nice as far as support and resistance goes. All right. And so when I'm looking at this, this is going to help when you're day trading and you're picking your options because you can day trade with shares, of course. And there's a lot of different ways to day trade. Let me say that. What I'm talking about now is day trading with call and put options. You can do it in a multitude of ways, but for the sake of time, I think that this would be the easiest one to explain and the quickest. Calls, puts. If you don't know what a call and a put is or how they work or are and how they work, a call is a bet that if a stock goes up, it's going to mature in value. It's going to go up in value, right? And a put is basically a bet that if the stock goes down, it's going to increase in value. So one, you make money if the stock goes up. The other, you make money if the stock goes down. So that's what we're looking at. That's what we're talking about right now. So looking at the 45-minute, again, next two candles, what are we doing? I look at this and I see, okay, the RSI is at 70, extremely high, meaning that at some point, this has to come back and cool down, right? So, all right, the RSI is already high. So I'm already leaning towards puts because, I mean, you could play a call up this high, but again, what are the next two candles going to be, right? Within the next two candles, we could be seeing a red candle, right? So I'm banking on the red candle from just looking at the RSI. I'm going to need to be convinced more about puts the more I go down through my indicators. But right now, I'm looking at puts because of this 70 RSI. Next thing, we look at the body of the chart. I look at the body of the chart and I can see that the stock has been stuck here on this heavy level of resistance for a second. Made a crazy run up, but then boom, slammed right here. And we've been here in the past, and you can see what happened in the past. A lot of tests here. 1, 2, 3, 4, 5, 6, 7, 8, maybe more if you break it down. But about 8 tests on this top line, and we kept getting rejections, right? Last time we got a rejection, it was a major rejection all the way back down to 540, and then we came back up to test again. So right now, it looks like puts could be the quickest thing to play for a day trade. Again, I'm not saying that the SPY is going to pull back for the next week. I'm just saying that from what I can see, again, this is a still market that we're looking at, but from what I can see, it looks like the SPY is going to pull back. So I'm still looking at puts. 1, RSI too high. 2, we're sitting right on resistance, and we haven't broken it without staying above 8 or 9 times, right? All right. Now, where is this going? Okay, so if I'm looking at a put, we could look at this POC. The POC is at 561. Honestly, I think I've already charted this one, and I want to say that 560 is actually support from what I had before I took my lines away. So 560 is what I would be looking at. A pullback to is at 562. It pulls back $2. That's pretty much all I need. Again, if you're buying a contract that expires the same day or the same week, that could work. But a contract that expires a month from now would not work. So when it comes to picking your expiration date, it could be same day. But if it's same day, you need to keep an eye on it. And if it starts to turn around, you need to go ahead and cut your losses. If you have it, until the end of the week, then you have a little bit more flexibility if it pulls down and goes up. But then you also are not going to be losing as much or making as much once it decides on a direction. So we hit the resistance. We're planning for it to come back down to support at 560. So that's good. We can check that off. We also have our 20 MA that's sitting right here at about 560 as well. So we should be getting a bounce at about 560. So it looks like 560 to 558, somewhere in between there is where we could be pulling back to. And we can keep it moving. All right. Next thing, I mean, we can eyeball this when we look at the MACD. The MACD is already crossing over to the downside. And we know that the MACD is our trend indicator. So if it's crossing over to the sell side, that means that we're just starting a sell trend. Now, it could be a short sell trend, just like something like this that we had before, or it could be one of these, or it could be a big sell trend like this here. Regardless, we just need it to pull back $2. We're out of the trade. We're not trying to make 1,000%. If it happens, cool. But we're not, the goal is not to make, when you're day trading, the goal is not to make 1,000% on every trade. The goal should be to make anywhere between 10 to 30%. You get out because you still have tomorrow to trade, right? If you're day trading and you're day trading, let's say 5 days a week, 10% every day, that's 50%, 20% every day, that's 100%. I think that's the easiest way to build up when you're day trading, is just aim for attainable percentages, and then just keep that momentum going and keep that consistency going. All right, MACD telling us that it's in a downtrend. Stochastics, we look at that, we can see that it was just at 100. It was bumping up against 100. It hit it 3 times, came down, and it looks like it wants to come back down to at least 20. If it breaks this 20, we're going to go ahead and flush all the way back down to 0. So everything is telling me that on the 45-minute, the stock is in a decline. So I'm already looking at puts for a day trade. So again, the market's not live, but if we're in a live market, things are moving. I'm looking at puts, and I'm looking at getting out of my puts within 45 minutes of the market opening, right? Because that's the time frame that I picked the overall trend on. 2 candles, 45 minutes, I need to be in and out. All right. Next thing, 15-minute. Okay, again, I'm going in threes. Let's pull it back some. So when I pull back on the 15-minute, I have to see, okay, what is my 15-minute giving me? So when it comes to multi-time frame analysis, you will not have every time frame agreeing with each other. That's where the risk management comes in at. And that's where, honestly, just the more time you spend with these time frames, the better you'll start to note, like, okay, if this happens on my lower time frame, that means you can push my higher time frame, and vice versa, so on and so forth. So if we look at the 15-minute, we can see that on the 15-minute, it was already pulling back. RSI is still pretty high at about 60, right? And it looks like it was trying to tail up a little bit, but we're still sitting at the same point, still sitting at resistance. This is just a better picture of it, right? Still underneath that 20. If we could close 2 or 3 candles above it, then I think that we could take off. But again, for this trade, we're sitting right at support still, and we could be coming down, like I said, back down to 560. Potentially, we could come back down to 558, 559 if that was to happen. So same thing here. Now, the things that change is the MACD and the stochastics RSI. So if we look at the MACD, we can see that it is already in a downtrend, right? The downtrend on the 45-minute hasn't happened yet, but we already have a downtrend on the 15-minute, and it looks like it's getting deeper and deeper, right? So the thing that we will have to watch now is, does this trend continue? And if it continues, we don't need it. Again, this is the 15-minute chart. We don't need a complete blowout to the downside. We just need it to pull back $2 before it goes up to whatever it's going to go up to, and we're out. We're not worried about what it's going to do for the day. So looking at the 15-minute, we can already see we're in a confirmed downtrend. We're sitting and testing support, and we just came off of a pullback on the RSI. We look at the stochastics. It looks like we touched 0. It came back up to 20. And again, we don't know what it's going to hold, but it looks like we could get some fight back to the upside after a pullback. So this pullback could be really quick from what we're seeing. Then I go back down to my 5-minute. This is the tricky one. This is where I'm waiting for an entry. But guess what? My 5-minute agrees with my 45-minute, right? My 15-minute is kind of in the middle. My 45-minute is showing that it's moving to the downside. And when I look at my 5-minute, it's showing that, hey, it's ready to go to the downside as well. If you look at the 53 on the RSI, it is pointing down. If you look at the candles, you can see that here we got the 20 crossed underneath that 50, right? So the 20 is underneath the 50. And then again, this is just a better picture of consolidation right at resistance. Next thing, the MACD just started to cross over to the upside, but it's showing some weakening. So, but the overall trend for it was still down. So it's trying to resurface. Again, we could see it pop, but you check that stochastics. Stochastics is pretty much just coming off 100, and it looks like it want to come down to at least 80, which is good. So what I would do if I'm looking for an entry is because you're going to enter on the 5 minute. You can watch on the 15 minute, and then your execution in broad, time frame is going to be the 45 minutes. So 5, 15, 45. 5 is the entry. And what I would do is try to find a high point. Since I'm playing a put to the downside, I actually want this to move up first so I can buy my put at a cheaper price. And then when it comes down, I can go ahead and get out, right? So that's what I would be looking for on the 5 minute is, are we gonna pop up? And if we don't pop up, I'm fine, because a lot of times when you day trade, you're not just buying one contract, right? Day trading, you might say, okay, I'm buying 5, 10, 15, 20 contracts, and I'm going to buy them at different price points as it moves down. Don't have too much time to talk about all of that today, because I still have to talk about the swing trading side of things. But this is just a general overview of how I scope out some of my day trades, still using the same indicators, same setups. But there's, again, a million ways to do it. This is just one of the ways that I do it. I do day trade in other ways, but I think that if you're new to day trading and you want to try it, this could be a way that could work for you. If not, again, there's multiple ways to day trade. You can also adjust your MA ribbon. You don't have to use simple moving averages. I would recommend an EMA, an exponential moving average for your day trades, if you don't like the SMA. So if you're looking for something, SMA is a little too slow, I think EMA works. Probably, honestly, EMA may work a little bit better depending on what you're looking for. Do I have any questions? I know I've run through a lot, but any questions?
So you said 5 minute, 45 minute, was it 15?
Yeah, 5, 15, 45. Yep.
Okay. And what do you do again if they don't agree with each other?
Yeah, if they don't agree with each other, I like to look at the overall trend. There's only up and down, right? So that means if I'm looking at 3 different time frames, what is the consensus for most of them? And then also, I'm going to be led by my larger time frame. So if my larger time frame is telling me down, I'm already going to be paying attention to how I can get this down. And then if my entry is telling me down, the middle, which is the 15-minute, I'm just watching on. So if your larger time frame and your entry are in agreement, then I think that's one of the safest ways to take it. Yeah, the different time frames, I see your question. Yeah, if different time frames are conflicting, which one do we choose? The broader time frame, like that 45-minute, is probably going to be why you got into the trade. So I would pay attention to that one. And then again, your entry is just going to be where you get in at. That 15-minute is going to be what you're watching. And again, it varies. It depends, because sometimes you won't have the same setup that I have. This is just an example, but ideally you want all of them to agree. If all of them agree, easy trade, easy money. But if, let's say, only one is going the way that you think and the other 2 are going the opposite, you may need to rethink the strategy, or just wait and get another candle. That's why I say on the 45-minute, I say 2 candles, because that first 45-minute candle, you probably can't get a good read sometimes. Like it may throw you off, and then you say, okay, let me wait to see the formation of that next 45-minute candle, and then you may get a better pick then. So it's all about timing. And if you butcher the entry, especially with day trading, you butcher the entry, that may blow the trade for you. Does that help, Ty?
Yes.
Cool. Munir, I think I'm pronouncing your name right. Does that help? Oh, yeah, you said yes. Thank you. Okay, cool. Great. Any other questions about this day trade setup? Again, this is not the only one. I think this is the easiest one that I found. There's definitely some more complex setups, but I don't have time to go too much into that. And I think that we'll be covering those in the Discord on Wednesdays, because we just started our intro to options series, to where we're actually, targeting different topics. So if you're interested in that, Wednesdays, but it's only for Discord only members. So if you're interested in joining the Discord, again, this would be an opportunity to learn more about options and day trading. All right, I don't have any more questions in the chat. All right, swing trading. So when you look at swing trading, you would not look at a minute chart, period. 5 minute, 10 minute, 45 minute, none of that. I wouldn't look at that if I'm swing trading. If I'm swing trading, that means that I plan on holding this for a second, right? I don't plan on buying this today and selling it tomorrow. I plan on buying this today. I might sell it in 3 weeks, right? So with that being said, the first time frame that I would check honestly would be the week. So I would check the week. Let me get these lines off because these are minute lines. I would start with the week, look at the day, and then look at the 4 hour, right, for my swing trade. So I would look at the week. So if I'm looking at the week on the SPY, I can see that it looks like the SPY wants to go up, right? You start with your broader time frame, just like you would start with the 45 minute when you're looking at day trading, right? So you look at the week, cool. My RSI is at 62. It's pointing up. That means that we have some momentum to the upside. When I look at the moving averages, is doing the same thing that I've been teaching before. You have these 4 moving averages. That 20 MA is going to be your bounce point. And you can see it's bounce 1, 2, 3, and we're on the 3rd bounce. We're also testing the top side of resistance right here. Oh, wrong hotkey. Boom, there we go. Testing resistance right here. Still have space on the RSI. It's pretty high, but we still have space to go up to 70. And then if we look at the MACD, the MACD is preparing to cross over. The first time it looked like we were going to have a crossover. We got faked out and it continued to drop. But this time it looks like we may have a crossover. And again, we do have the Fed speaking this week. So we could see this next week candle, we could see to be a nice candle. So when you're looking at the week, you want to be able to predict the next, like I said, 2, maybe 3 candles on the week. Again, if I buy this today and I'm looking at selling this, I don't know. I'm looking at selling this in 3 weeks. I'm looking at 3 weeks worth of candles on the weekly chart, right? So the MACD looks good. RSI looks good. Stochastics was cooling off. It pulled back. So I would like to see the stochastics turn around and push its way back up. If this stochastics kept going down to 0, then I may exit, but everything else looks good. A low stochastics is fine at 30 because we still have 70 to move to the upside. And again, we do have great news coming out this week as far as rate cuts. Don't know how much they will be, but we know that people have been waiting on rate cuts for the last few years. All right. After you look at the weekly, next thing you need to do is look at the day. Same thing on the day. RSI, where is it at? Is it at 59? Great. You look at the chart. We are testing that same resistance for a break to the upside. So we already know that if we break this, this resistance that we've been rejecting on for a minute, that's easy money. And then the helpful piece, right? We look at that MACD, that's going to help us out a lot. We have a pending MACD cross. Well, we already have the MACD crossed over to the upside. Again, the MACD is your trend indicator. So it's telling you you're either in the uptrend or you're in the downtrend, right? So now that we just crossed to the upside, that means that we're going into an uptrend. Perfect for sitting right up against resistance. And then we check the stochastics. How much gas do we have in the tank? We're at 72 out of 100. We still have space for a pop to the upside to test that 100 at the top. So everything looks good. So if I'm looking at a swing trade on the SPY, again, I counted my weeks on the weekly. I'm looking at the days here. Everything checks in. So the week and the day agree. Good to go. And then we can go down to the 4 hour. We look at the 4 hour and we can see, okay, we may need some cooling off before that, or we may have some cooling off in the meantime, between time, but we could be breaking back to the upside still because RSI is at 62. We're testing resistance. So if we do get a slight pullback, it looks like we could be pulling back down to maybe 558 before we go back to the upside. So it's forming a cup already. And if you trade cup and handles, this could be an easy cup and handle to play, right? So 4 hours is my entry, just like the 5 minute would be on my day trade. And where do I enter at, right? I'm waiting for a pullback because 62 on the RSI tells us what? It's hot. It's high and it needs to cool off. We're also at resistance. You look at the MACD, we're crossed over to the upside with some strength, which is good. And then you check that stochastics. our momentum indicator is already at 100. So if this pulls back down to about 80, it could potentially pull all the way back down to 50, but this is going up. It just needs to cool off, and we can tell by looking at the 4 hour. So the 4 hour is where I'm going to enter. The week is my broader time frame, and then the day is where I'm pretty much going to be watching, the ins and outs of what's happening, right? So on the 4 hour, I'm waiting for a nice pullback again, because I want to play this to the upside. I want to make money while the stock goes up. So I need this to pull back to become cheaper. I buy in, and once it tests and break resistance to the upside, I'm good to go. This stochastics is one of the things that may lead my entry, because it's already high, right? Can't go to 150. It's already at 100. I need this to cool down. Once it cools down, I enter, take it to the upside. Any questions? I know I said a lot. Great, no questions? That means that I did a good job at explaining this, so y'all don't have any questions. All right. So that's day trading versus swing trading. Again, multi-time frame analysis is going to be key. 3 time frames. I like for day trading, again, I like the 3 pair. I like the 45, 15, and 5. And then for my swing trades, you can stretch it out a little bit. I like the week, the day, and the 4 hour. Now, these setups, again, you will see a whole bunch of other setups if you go to different traders. This is just what I'm comfortable with. And I do use different setups, but this one is the easiest setup. I'm showing y'all today the easiest and quickest ways for day trading and swing trading, in my opinion. But yeah, if y'all don't have any other questions, I'll go ahead and pass it over to Mark so he can chart out y'all picks for the week. All right, cool. Send it back to you, Mark.
Appreciate it. All right, give me 1 second to share my screen. All right, perfect. 50. So planet tier. Start off on the weekly, and we can try to work our way down from there. Okay, so we have planet tier, and I'll clear out. Make this cleaner. All right, so looking at the weekly, let's just draw some support resistance lines and then work from there. So currently it looks like Planeteer is working on this resistance. It's been testing resistance. Okay. So it's been testing resistance, excuse me, sitting here at about $36. It's the current resistance level that we have. If it was to break above this resistance, the next place it'll probably go and test is going to be somewhere in about 40. So this would be the level, about 40 would be the next place that it'll go and test. So if it breaks out the resistance, the next place we can see it hit is going to be 40. Now, if it was to reject resistance, where is it going to go? So the next place it's going to go, if it was to reject resistance, we can draw a nice little support here at about $33. That can be our first level of support. And then again, if it breaks below that, we can make it a little bit tighter and have it sit here at about $30. So that's the next 2 levels that it'll test if it was to decrease or reject our current resistance level. Now, if we look at our other indicators on the weekly, we see that our RSI level is kind of high. It's in that oversold region, sitting at about 68. Can it get above that? Yes, it can. I would just be a little bit careful if I was to be trading this, just because we know that RSI level is high. We're testing resistance, and we're pretty close to getting to those all-time high levels. Well, I mean, we would have to get to about 45 for it to be all-time high, but we are messing around with some higher levels with Planeteer, so I would just be a little bit careful trying to get into a trade. It looks like from where the stochastic is at in the RSI level, we should be seeing some type of pullback or cool down soon. because it's testing this resistance, if it starts to cool down, again, it's going to be coming to this support level at about 33. And if we look at the daily, let's see if we can see anything on the daily. Yeah, so the daily, same thing. It's pretty high. It's showing us RSI level is at 69, almost in that oversold region or overbought region, excuse me. RSI level is at 100. So it's stochastic RSI showing us that, yeah, this needs to cool down soon. Can it stay up here for a little bit longer? Yes. But by it staying up there, it's not going to give us a drastic amount if it continues to go up. We may see this go up to about another $1 or $2 and then start to pull back. Now, when that pullback happens, again, just be on the lookout for this first support line at about 33. If it was to continue to pull back, it's going to also make that moving average, our 20-day moving average, is going to get close to our support line. It's going to be closer to that 23 level. So when it starts to pull back, wherever that moving average is at, that's probably where the stock is going to be trying to get to. And then that's going to more than likely be around $33. So just be on the lookout for that. For me personally, I would just be waiting for Monday with this stock to see which way it's trading. So Monday, if it's opening up red and it looks like it's pulling back, we're probably going to be seeing it get to 33. So if you wanted to do a play, maybe a put option would be your best bet. Other than that, I would just wait a little bit before I get into this. Now, if it pulls back and it gets to that 20-day moving average and it looks like it's rejecting it, then you may be able to play this to the upside. And then that upside would be somewhere back at our current resistance range, which is sitting at about $35 right now currently. So that's what I would be looking at for Planeteer. Again, it is in the overbought region, so I would just be a little bit careful trying to play a call option right now or trying to swing this at the current moment. I would just be waiting for it to pull back. And then once I establish where the floor is at or the support level is at, then I would get into a trade to the upside. Any questions on Planeteer? Check the chat. Perfect. All right, next one was Oracle. RSI. All right, so Oracle spiked up because of, they have deals with Amazon, and then also they have the NVIDIA super computer that they were supposed to be creating that has about almost, I can't remember how many NVIDIA chips they said they have, but it's quite a few, about like 15,000, I think, or maybe more. But we had this spike for this week. They had earnings this week as well. So that also contributed to this spike. Oracle is currently in all-time high levels. So for me personally, again, when I start hitting all-time high levels, I like to be a little bit careful on how I'm trading the stock. And the RSI level sitting at about 69. It's almost in that overbought region. Well, it's basically an overbought region. It can get above 70, but I would be, again, a little bit careful trying to play this right now just because we know that it is peaking. And we can see that the stochastic does have a little bit more room. So maybe if you want to try to do a day trade, you could. But again, I would be a little bit careful with here. If we was to draw some support and resistance lines, basically our first support or resistance area would be the current price where it's at now. And then if it was to break above that, the next place we see the stock has gotten to was about 172. So that'll be the next place that I can draw my resistance. So if it was to break above our current resistance, we could be seeing it get back to 172. At this point, it's all-time highs, so I like to treat it as $5 increments from that moving forward. So if it breaks past 172, the next level it can probably make it to is 175 and then 180. So that would be for my resistance or my ceiling. For my floor, now in the first place, if it was to pull back, we could see it try to drop back down in $5 increments, but if not, we're first going to come and see it try to test its current level or its previous level at about 145. So at about 145, 146 is where we can potentially see it pull back to if it was to reject this area. And then at that point, the 20-week moving average would be somewhere closer to this support level we just drew. So that's a nice little support. And again, if it was to break below that, the next place that we can see it get to, it's going to be in here at about 129, 130. Now, is it going to drop all the way back down here? Probably not no time soon. I couldn't predict that, but if it was to pull back, those are the levels that it is going to go and test. And if we look at the weekly, or excuse me, the daily chart to see how it's going to move this week, we can see RSI level is in that overbought region. Stochastic is in that overbought region. We do have some separation on that MACD, but it is looking like it's rejecting our resistance, and it wants to start to pull back. So it did reject this 172 resistance area, and we see it broke below the next resistance we had at 162, and now it's still trying to pull back. So Monday, what I'll be looking for is, are we going to open up red? If we're opening up red and it looks like we're pulling back, we're probably going to end up seeing Oracle at the end of the week get back to 145. That's where it look like it's going to be going to. Now from there, what we need to look for to see is, will we reject this 145 range? If we reject this 145 range, then we can start to see it increase back. But if we was to break below that 145 range, the next place we're going to be going to test is this 100-day moving average, which wherever this 100-day moving average is at, that's the next place it's going to go and test. So I would still be on the lookout. I wouldn't be trying to get into this trade too quickly, because it's looking like it's already ran this course. You know, the earnings play, again, they had earnings Monday night. We can see Tuesday, it broke out of that. So I would be just a little bit careful on trying to play this to the upside right now and letting it cool down before I actually get into a play on Oracle. Any questions? And let me check the chat. Any questions yet? All right, perfect. Let's move to the next one. Just going to be Berkshire. Most of Berkshire. I'll do the class. Okay. All right. Berkshire. So if we was to, on a weekly chart, we was to first try to establish some resistance lines. The first place is going to, if it was to increase, it's just going to come back and try to test about 477. All right, so it's going to come and try to test back this area. Again, Berkshire is basically, this is all-time highs for it. So that's the first place it'll go and test. Now, we do see that the RSI level is trying to cool down. It's pointing downwards. It's trying to cool down. If it was to continue to pull back, we're probably going to see it get back to the 50 range for the RSI. Just because previously we see that's the last place it tested where it rejected. And then also, with that pullback happening, that'll probably have our stochastic RSI level pointing down to 0. So if the RSI level gets to 50, more than likely our stochastic RSI level is going to be really close to that 0 range. It's going to be pulling back. So it looks like Berkshire is pulling back. Now, if it was to pull back, how far is it going to go, right? So we have our first, it's currently trying to test a little support level. It's getting really close to testing that first support level here. So it's basically testing our first support at 447. Now, if it was to break below this, the next place is going to go and test this 20-week moving average, which is sitting at about 421. So that's the next place it could potentially be trying to get to as far as pulling back and cooling down. And then this is where I'll be looking to see if this is a good opportunity to get in. So at that point, it's going to be testing our 20-week moving average. And we can see previously, anytime it tested this area, it likes to reject it and trend upwards. So I will be trying to look to see if that's going to happen once it gets down. Once it cools down, it tests that 20-week moving average. Now, if it breaks If it breaks below the 20-week moving average, the next place is going to come and try to test is going to be about 400. And then I chose 400 because basically we have this cluster of candlesticks that have been testing this area and rejecting it. And then also it'd be closer, the 50-week moving average will be closer to that line as well. So it's basically the 50-week moving average as well. And again, anytime we have moving averages, you treat them as either support or resistance. So you'll do the same with Berkshire as well on this weekly chart. Now, it looks like it's cooling down just from all of the other indicators, especially with the MACD. The MACD is pointing downwards, and pretty sure in the next 2 weeks, if we continue to be red, we'll have that crossover to the downside on the MACD as well. So let's look at the daily to see how it's going to move this week. See if we can find any trades. All right. So on the daily chart, you see RSI levels pointing down is in that 50. So and previously we can see when it gets to this level, it's been treating it as like the floor. So we could be hitting we could be finding the bottom for Berkshire. We may start to see it consolidate a little bit, but overall it looks like it's coming to try to test this 442 range. And from there, what's going to happen? So we see it just broke underneath the 20-week moving average, and it's coming to test our support. Our support is also going to be the 50-day moving average. Okay, so if it can break below this 50-day moving average, we're probably going to be seeing this drop down to about 425, 420, 424, 425 will probably be the place where it eventually get to this week. Now, it has a lot of red candles. It's been trading for about 2 weeks red. So we could be seeing some type of rejection happen. And with that, if we have a rejection on here, I would still be a little bit careful on playing it, just because this could be a potential head and shoulders pattern being played or happening. So we have stock was going up, pull back down. It's coming up, created the head, created one shoulder, created the head. It's pulling back. And now what we could see is a day or two of green, or maybe a day of green to where the stock price is going up. And then ultimately we could start to see it come down and creating that head and shoulders pattern, creating the second shoulder for the head and shoulders and breaking out. So what I would be looking for is for this stock to completely consolidate. So for this week, I'm looking to see, will we see some green days? If we have a few green days and we start to see a pullback, can we break below this 443 range? If we can break below 443, we'll probably end up seeing Berkshire get back to about 422. So that's what I'll be looking for. I wouldn't be trying to trade it on the upside just yet, just because I know on the weekly RSI level and stochastic is pretty high. So I'll be waiting until those cool down before I actually get into a trade to the upside. Now, if you want to try to make money off of Berkshire, what I'll be waiting for is for it to see if it can break past 444. And if it can, then I will do some put options to the downside. And I wouldn't make my strike price 420, 422. I would make my strike price somewhere at about 434. And then if it continues to go below 434, I'll just stay into the trade until I can confirm that we're about to hit the bottom. And then once I see that we're hitting the bottom, I'll go ahead and get out of it. Any questions on Berkshire? Okay. All right, let's see what else we have. Okay, I see we have one more stock that we can go over. All right. Perfect. All right, so for this stock, currently almost in those almost in all-time high levels. If we was to draw support or resistance, we could have resistance here at about 359, 360 could be resistance. If it was to break above that, we're basically in all-time highs, so we can treat it as $5 increments if you like. So the next place it can get to is 365, after that 370. For support, My support level is going to be my 20-week moving average. Is going to be the next place that it'll probably come and try to test. And that's going to be, because we're green, it's going to be somewhere at about, oops, keep doing that. At about 336 is our next level of support. Now, if it was to break below that, if it was to break below that support, then the next place is going to come and try to test is just going to be at about 315, because that's up there somewhere. But at about 315 would be the next support level that we have. So if it was to trend down from here and break below 335, we could be seeing this get to back to about 315. And now if it was to break above our resistance, just treat it as $5 increments. So then the next place it could potentially get to from here is going to be about 365, 370. Okay, let's check the daily. And let me talk about some of the other indicators. I'm sorry. RSI level is pointing upwards. We do have some room. So it's been treating the 50 range as its oversold region. So because it's pointing up, we can probably see our RSI level get back to about 70. So we still have a little bit more room on that RSI level. It's currently at 60. We can see it's been treating 70 range as a ceiling and the floor is 50. Pair that with the stochastic RSI level. If this is pointing upwards, we're probably going to see it increase. So because this is pointing upwards, with that, because it's with the stochastic and the RSI level going up, if this continues to go up, we're going to have that MACD crossover to the upside that'll cause us to increase in value. The fact that we're in that, we have the numerical order for our moving averages 20, 50, 100, 200, and it's rejected the 20-week moving average. We'll probably continue to see this go up slowly but surely. So the next range, that 370 that we talked about as 365 that we talked about as our next resistance level, is probably more likely to happen with all of these factors paired into it, looking at all the other indicators. So if we look at the daily to see if it's going to move up on the day, you see that we just had a crossover on the MACD to the upside. And then we also have the stochastic is getting close to that, where it's basically in the overbought region. But again, we could see it spike up a little bit more. And then we have the RSI level sitting at about 55 point upwards. We see it's trying to test, it's been testing that resistance level. So the thing that you want to look for is, can it break above this 367, 366 range? If it can break above that, the next place we're going to be seeing this get to this week is about 370. So that's what we'll be seeing this get to if it can break above this resistance. Again, pair that with this MACD crossover, we may see that happen. We'll just have to wait for Monday to see which way it's choosing. And at this point, let's just say it opens up at 336 this week, right, for Monday, and then starts to trend upwards. We'll be just seeing it get back to that 365 range. Any questions? I'll check the chat. Oh, yeah. So you want me to explain the stochastic indicator? So basically, the best way that I like to put it is that the stochastic indicator is going to let you know like how much room the RSI level still has to go up. So basically, the stochastic RSI level is used to tell you if the current RSI level is oversold or overbought. So we can see here that not all the time the regular RSI level is going to get back to overbought or oversold. Well, when you use the stochastic RSI level in comparison with the RSI level, it'll let you know if that current RSI level is either oversold or overbought. So currently, when we're looking at this RSI, and let me try to replay it back for you. All right, so if we was to look at this stock just here and just look at the regular RSI level, right? We're telling ourselves that 70 is the oversold region. So ideally, we should be able to see this RSI level get back up to 70 right now. Well, if you was to use the stochastic RSI level, and again, I like to use it to just compare my RSI level, we can see that the stochastic is telling us that we're basically overbought. This stock has been overbought and it needs to cool down. So with this, I like to use it to tell me, okay, well, now that my RSI level is at 56, my stochastic is at 100. I know that this current level of 56 is over bar. So this stochastic has to cool down. It needs to cool down. And that's how you can use the stochastic RSI level. So the regular RSI needs to cool down because we can see that the stochastic RSI is oversold. Does that make, overbar, excuse me. Does that make sense? Okay, perfect, perfect. All right, any other questions? That was a great question. All right, perfect. So I'm gonna hand it back off to Ladarius so he can go over his picks for the week. And if y'all have any more stocks that y'all want to look at before I go over the pattern of the week, just put them in the chat and then I can go over them. Thank y'all.
All right, I appreciate that, Mark. Go ahead and share my screen. All right, I have a few. I have 1, 2, 3, 4. I have about 5. A few of them we looked at. I want to say in the Discord we looked at. So yeah, let me share my screen. Where are we at? Screen. There we go. All right. Start with Spotify. All right, so Spotify, just to get us started, I think Spotify is a great stock moving forward, long term. A lot of active monthly users, and the chart has been looking nice. I think that Spotify is one of those stocks that, unless you're in music, you're not really paying attention to it, but I still think it's a great stock to trade. If I scrunch the chart up a little bit, you can see that we've been sitting at resistance since what, July? Yeah, since back in July, we've been testing resistance. We kind of broke through here. I thought we would have a breakout. We reached up to about 360, and then we came all the way back down to about 300, which actually down here would have been a great buy-in. Actually, let me get a better view on the day. Yeah, so popped up, popped down. This down drop right here to the 100 MA was quickly bought up, took us all the way up to about 346. So that was a $46 pop to the upside. Now, now we're still testing that that resistance, and I think that we could get a break here. So we look at the RSI. RSI is at 55, pointing up. Look at the MACD. The MACD is getting ready to cross over. We have a pending MACD crossover here. If we get this MACD crossover while we're sitting testing this resistance, we could get a breakthrough. And I think that this time we won't get a wick. We'll actually, maintain the levels between 350 and 360 where the stock can move higher. 1 second. Someone else getting a notification. All right. And the next thing after the MACD, after we get this MACD crossover, we still have space on the stochastics to take it to the upside. So we're only at 75 out of 100, meaning that we still have some space to go before we hit the top. So I think this was one that I called in the Discord that I've been watching. I think I called it early last week. Haven't hopped in yet. I want to see what's going to happen with this break. If we can break and hold above 340, then I think, again, 350, 360 is what we're going to be looking at. And again, pending MACD crossover to the upside, which could be nice for us. And then we look at the week. The week looks good as well. We just came off of a pullback. Stochastics is showing that here. And then we have a 64 on the RSI to the upside. So again, hidden gem. People have been paying attention to this one, but I mean, easy stock to just buy and hold and wait for the run. And then if we ever see it back down at 300, again, it's an automatic buy for me in my book. Really like the stock, and I like it better at lower levels. But right now, it's just climbing right on that 20 MA. And I think that since the 20 MA is pretty much smashing the candles up against resistance, I think eventually we should pop that resistance. And then, like I said, we can start holding that 360 level from what is this, back in February of 21. I think we can get there. So Spotify, if you haven't paid attention to the stock, I think now is the time. It's sitting right up against resistance. If it pulls back, cool. I think it's good for a long-term hold. But if you're looking for an option play or a swing trade, I would watch this daily, and I will also watch this MACD crossover. Again, if it pops, we got enough space. on the stochastics is at 55. I normally like 45 to 55. So this 55 would be good to the upside. And then looking at that stochastics, we have about 25 points before we run into 100. So really, really nice setup on the daily for Spotify. All right, next one, Coinbase. I know there's been a lot of talk about crypto. Let me clean some of these lines up. You can see we've been going crazy when it comes to Coinbase. We got lines all over the place, but I think that buying Coinbase at these lower levels, I know some people may think that I'm crazy. I still think that Coinbase could be $1,000 stock in about 5 to 10 years, easily 10x in the value, because I don't think that Bitcoin is going anywhere. Now, the other cryptos, I can't really say, but I think that Bitcoin is here to stay. And then if we look at it, look at the MACD crossover. Again, we just looked at the MACD crossover on Spotify. And if you look here, we have a pending MACD crossover in the same fashion on Coinbase. The only thing about this one is that we have a lower RSI at 38. Again, I like 45 to 55, but if you're going long on Coinbase, this could be a nice time to get in because we could be pushing back up to about the 180 to 200 range if we get this MACD crossover. Another thing you want to keep an eye on is the stochastics is at 43. So we got a lot of gas in the tank to make money going to the upside once we break out. So RSI is low, stochastics is low, MACD is ready to cross over, and we just came off of a bottom around 145. So again, Coinbase is looking decent on the day. For those that want to trade it on that time frame, we look at the 4 hour. The 4 hour looks like we just ran into some form of resistance at that 20, but I think that we could get a reset on the stochastics, and then we're still ready to move back up. I think the levels to watch really is 180 even, and then once you get up to about 191, 192, I'll be a little careful. We could pop up to about 196, 197, but 180 to 192 is where I would be watching the stock at. If we look at the week, we can see the week is just showing what's been happening for the last week, pretty much mimicking Bitcoin, but I think that we're gaining some ground. And again, I think that for those that want to swing trade it, we could see a pop back up to about 180 to 190 for a swing trade. And for those that's holding long, I mean, Coinbase at 160 is fine. Again, if you look at 5-10 years down the road, it being anywhere between 800 to $1,000. So a lot of opportunities here. It just depends on what type of trader you are and what you see within the stocks. Let me see. You'll have a question. What is your exit price and date projection on spot? When you say exit price and date projection, are you referring to an option, or are you just asking about the date projection? Is the part that's throwing me off. You're asking for like expiration date, Ross? All right, I guess he'll fill that in, but just assuming that that's what he's talking about, the exit price right now. So again, bumping up against 340 pretty much. I'm looking at 350 to 360. I think 360 at a high because we had a wick there and it pulled back. But right now, I would comfortably say 350. And then after that, I'm looking at about 360. But a 360 touch right now, we may be a touch and go. It may hit 360 and then pull back to about 355, 350, and then run back up again. So I'm looking at 350 to 360 if you're talking about an option. And the date that I'm looking at, again, I would look at 3 weeks to about a month and a half if you're swinging it. And if you're looking at a day trade, I'm not sure. I have to look at lower time frames once it opens up. But that's what I have for Spotify. Percent number about your stop loss. Yeah, so great question. Do I have a percent number about stop losses, or does it depend on the trade and stock? It's actually both. Normally, I would look at 15, 20% as a pullback on a swing trade. That gives you enough space to where if they try to raid your stop loss or drop the stock real quick and send it back up, you're not shook out of the trade. that's what I'm normally looking at. If it's a stock I'm kind of nervous about and it's not an A+ setup, then I'm looking at about 10% to 15% on a pullback. I think that answers your, yep, cool, perfect. All right, next stock, Celsius. So this one is a long shot. I've been talking about Celsius for a while. Why did I do that? I'm trying to scrunch it up. And I think Celsius could be at a turning point. Celsius has found its ground. And I think that, I mean, at $33 a share, honestly, I think the stock should be about $50 a share. Anywhere between, yeah, I would say about $50 to $57 per share if you look at fundamental analysis. I think $33 is a steal, especially if this stock goes back to $90, $100 a share. That's $70 to gain per share. And it's only, I mean, for $100, you can get 3 shares, right? And if this goes back up to 90 to $100, you're looking at $90 turning into 300. Every $90, yeah, every $90 pretty much turning into, I say every 90, every $100 turning it to 300. So you get 3 times your money. That's with shares. If you buy options, in my opinion, it's not financial advice, but if I'm doing options, I'm looking at 2025 call options, and I'm looking at January on forward. So, you know, anything in 2025, in my opinion, works. The better the lower the strike, the better, in my opinion, because let's say you get a 50 strike price for January, right? Or you get it for the summer and it actually pops, and let's say it goes back to 100. That means that you can go ahead and exercise that call. And once you exercise that call, you're getting 100 shares at $50 when the stock is at $100, right? So a lot of flexibility that can happen here. Now, would I go all in on this one? No, I wouldn't go all in, but I would slowly add as it builds its way back up. So the first level that I'll be looking at is 40, because it looks like it's going to bounce up to 40 and it may reject. We have a lot of sales sitting right there, but after 40, it looks like 48 to 50 could be where we end up. And you can see we have a lot of action on that 50 line. So 30 to 50 is a nice swing. And then if you're one of the long-term holders, 30 to 100 is even better, in my opinion. So maybe doing a little bit of both. I've already owned Celsius, been buying it here and there. And I think that at 33, anything below 40, I think that is a good steal for Celsius, because they're beating their earnings. They're doing nice as far as earnings. They just had some issues while trying to expand into international markets. So do I have any questions on any of the stocks so far? Coin, Celsius, Spotify? All right, I take silence as a thumbs up. All right. Next two are going to be pharmaceutical stocks. So Viking Therapeutics is one that I'm newly adding to my watch list. I think that a lot of people should watch it. They have an interesting story to the stock, and they're in the same line as the obesity products. So I think that Viking Therapeutics is going to be one that I wouldn't go all in on them, but I'm definitely planning to throw my name in the hat at some point to see what we can make to the upside. Why does it keep resetting to the 4-hour? There we go. This looks a bit better. All right, so it did have a pop back in what is this? The beginning of the year, right after earnings, it popped, and then it consolidated pretty much around the $50 price point, and then it popped back up to 60. It looks like this 66 line, if you look at the VRVP, look at how many sales are on this line. A lot of buys and sells are sitting right here, but if we break top side at about 67, then we can start moving up into the 70, 75 range. Honestly, I think that we could be moving back up to 80, but I'm waiting for I want a nicer pullback. I also see that 20 is creeping. If you zoom in a little bit more, you can see that the 20 is back on top as the dominant moving average. And that means that we should be seeing that 50 follow suit. And if this pushes us back up to the 70 to 80 range, we could flip all of the moving averages, and we can have, have them in chronological order: 20, 50, 100, 200. and continue to bull run to the upside. So this is one to add to your watch list. I'm not saying that this one is tradable this week, in my opinion, but this is definitely something that I want to keep my eye on. I was doing some research on them earlier. We're going to continue to look into them, but I think that now I'm stumbling over my words. This one could be a hidden gem if you get in at the right time. So, for instance, the people who got in back here at about $20 and it's at $66, a lot of money was made for sure. And if you got in back here at $3 in December of 22, you could be rich by now, depending on how much you bought at $3. So again, just another one to keep your eye on if you're into pharmaceuticals or healthcare stocks. All right, one of my favorites, Transmedics. So Transmedics, you're going to hear me talk about this one all the time. Really good stock, great company, and they just bought their 18th plane, which I think it's crazy that these people own planes, but it makes sense when they're shipping around their organ care systems and helping out donors. So I'm actually waiting to hear more information about like the OCS 2.0, and I think that could really send the stock through the roof. There's little tidbits of information, but there's nothing concrete as usual. But looking at the chart and just focusing on technical analysis, MACD is in a really nice space as far as a crossover. It's just coming off of a pullback from about 135. It's already up $15 from that pullback. And you can see that these are some nice green candles, some really nice size green candles to the upside. We tested that 50 MA at about 154 and we pulled back, but we still held above resistance. So the next pop that I'm looking at is a test at about 158, 159. And if we can break that 158 to 159, we're looking to test all-time highs around 170 to 175. And do we have the space? RSI is at 47, pointing up. Again, it tops out at about 70. The MACD is getting ready to cross over, and then the stochastics is pretty low at 36. It can go to 100. So really easy, nice trade that I've been watching, and we've been playing options on. So this one is just a wait and watch and see what you can get. So that's all I have for the week so far. If you're in the Discord, I will be adding like other things that I find as I conduct research, but these are the 5 that I'm watching currently. And let's see, do I have any questions before I pass it back off to Mark for the pattern of the week? All right, cool. I will go ahead and pass it back over to you, Mark.
Appreciate it. All right, so I did see Ty posted another chart, so I'll go over that one first. So AMD. Okay. Right. Perfect. All right. So a little bit. So currently AMD is at $154.98, so just about 155. We see that. Excuse me. Last week it broke above its 50-week moving average, and then it came and tried to test this 20-week moving average, and it rejected it, and now it's trading in between those two. So if AMD was to continue to reject this 20-week moving average, we would basically be seeing this get back to probably about 145. And if it breaks below that, we could see it get back to 132. Looking at the setup for this chart on the weekly, this is setting up really nice to continue to go up, and we should start to see AMD try to come and test this 170 range. RSI level pointing upwards is at 51. Stochastic still has room to grow. It's currently at 29, so it needs to get back to 100. And then we have the MACD. If we look at this MACD, we're getting really close to a MACD crossover to the upside, which the way that these two are setting up, especially stochastic being so low, that crossover to the upside could cause a nice little pop for us that can get us to 170, and then potentially breaking past 170 and trying to make it back to about 200. Now that's not going to getting back to 200 isn't going to be in a week, right? That may take months for it to get back there. But overall, we should be seeing this get back to 170 the next few weeks. If we was to look at the daily chart, see if we still have some pullback happening. Okay, perfect. So on the daily, what I'm looking for this week is we could expect some type of pullback, or we could expect some type of pullback just because of where the stochastic RSI level is at. We did just have a crossover on the upside with the MACD. So because this stochastic RSI level is pretty high, we could still see this go up, but I would just be a little bit careful on that. So what I'll be waiting for to see is how it opens up Monday, and to see if it can break past. If it can break past these cluster of moving averages, because we have the 200, 150 moving average all together, and it looks like they're about to try to cross to the downside. So we can see the stock price break above that. We may be able to see it get to 170 this week. Now, if we was to see the rejection on these moving averages, I would expect for AMD to try to come back to about 143 and establish this 144, 143 range as its support. So it's going to try to establish this as a support, and then may consolidate on that. So that's what I'll be looking for. If it can, if it rejects this, I'll be waiting for it to get to 144, and then at that point, if it's showing that this is going to be a strong support level for it, and it can reject it, I will feel more comfortable getting into a trade or a swing, like an option play or a swing play. I will feel more comfortable with that. But looking for this daily, again, because of this cluster of moving averages and where the stochastic is at, I would be just a little bit careful trying to trade it for and hoping that it gets to 170 by this week. Now on the weekly chart, if you're looking to hold it for a while, again, when we come back here, you can buy shares and you can probably swing this up to about 170. It'll get to 170 in the next few weeks. Just looking at the stochastic RSI and the MACD, they're all setting up to be bullish, and then that'll cause it to get to 170. So that's what I see for AMD. Do I have any questions?
No, that's good.
Okay, perfect. All right, so I see Ross put another one in there.
Actually, one second. Can I see it with the VP?
Yeah, of course. If my VRVP will load, let's remove it and add it back. What's going on there? It. Okay, it's not working. See once. So for some reason, my VRVP is not working.
Oh, no worries then.
Yeah, I'm sorry about that. It's just not populating my VRVP in the sense of ranges.
Yeah, try to take it off and remove it and replace it.
Yeah, it's just
Still not working?
And
Oh, it has it. Okay, that's cool.
It's got an error message. It said like the runtime.
All right, that's fine. You can leave this one for me. I'll come back around to this.
Okay. And she just wants to see the VRVP at this point forward.
Let me see. Is mine doing the same thing? Nope. Yeah, mine pulled up. I can share my screen real quick and then just give it back to you.
Yeah, I'm about to stop.
Okay. Teamwork, make the dream work. All right. Where are we at? Boom. Okay. AMD, right? On the daily. See. Yep. All right. So it looks like VRVP is telling us that we have a lot of volume. What is this? Above 160. I mean, above, that's 157. So 157 to 167, a block of, I think that's sales. Let's see. Yeah, so the data window is telling us this right here is, well, this is about 50-50. This next level is more down and more down. Yeah, so a lot of sales are happening here in between this level, but it looks like we could get up to about 160 before we run into a lot of sales. Do have a lot of activity as it moves higher, but that's what we're looking at. And was this for Ty, right?
Yeah, thank you. This is great.
Cool, no problem. Let me stop sharing and hand it back off to you, Mark. See here.
I appreciate it.
Oh yeah, no problem.
So I figured out what was wrong. So I still had it in playback mode when I was showing the other one, and then that's why that was looking like that. So if we look at the daily for this one, because I was a little bit further back, we can see that we still have a little bit more room to go. The first level, because I was saying that the support line was going to be 170. Let me go back to the weekly and double check that weekly. Yeah, perfect. All right, so the same thing still applies. If it breaks past 155, we're going to probably be seeing it try to get to 170. And we're really close to that MACD crossover still. So everything still applies to what I saw earlier. It does look like this is making on the weekly, a pattern that we can draw. Does look like it's making a potential double bottom. I think we talked about AMD last week. I'm not sure. So it does look like it's making a potential double bottom. So we can break past our neckline area. We're going to be seeing this get to 170 this week. So just be on the lookout for that. So what I'm looking for is, can we break 155? If we can break above 155, we'll be seeing this get to 170. Yeah, same thing still applies. MCI. All right. So SMCI, current support that we can draw here for SMCI is going to be at about 382. That'll be our support level. We see it tested this area recently and rejected it. So if this was to pull back, we could be seeing this get to about 388, 382. Right, it's going to be the range that it can potentially get. So 370, 382 will be the range you can get to. If this was to continue to go up, the next place that is going to go and test, it's going to be right here at 504. So $504 would be the next place that it can go and test. Looking at the other indicators, sorry, my computer is charging. Yep, it's charged. All right, so looking at the other indicators, we have that we can potentially be seeing this get to 504. RSI level is pointing upwards, getting close to that sweet spot of 45.55. Stochastic is in that oversold region, and it's looking like it's trying to start to get back to the overbought region. MACD, the buying pressure is below the selling pressure. What I'll be looking for is for my blue line buying pressure to start to flatten out and start to point upwards. Once I can see it flattening out and trying to point upwards, we could start to see the stock rise even more. So if it was to break past 504, the next place it'll go and try to test is going to be here at about 600. It's the next place it'll go and try to test is at about 600. If we was to look at the daily chart, looking at the daily, we can see that RSI level is lowest, pointing upwards, trying to get back to that sweet spot. Stochastic is showing us we have a little bit more room to get back to about 45 on the RSI level. So we do have just a little bit more room. What I like about this is that we have a crossover on the MACD. So when you see that crossover happen, sometimes you can see that stochastic RSI level stay in that overbought region for longer, especially when the crossovers to the upside. And then vice versa, if the crossovers to the downside, you can see the RSI level stay in the oversold region for a little bit longer. But with this, again, we'll probably be coming to see this test about 500, 504, our support line we have drawn here. If it was to break out of that, break above that, the next place we'll be seeing this try to get to, we can have it draw it a little bit tighter at about 600, but that'll be the next place that we'll probably be seeing this get to. Will it get to 600 this week? Can't say that it will or not, but Monday when it opens up, what I'll be looking for is can we break above this 500, 505 range. If we can break above this, we could be seeing this get back to 600. So you can start to try to swing trade it, or if you want to do options, I would do option strike prices at about 550, just have it in the halfway of those two ranges. And I'll be trying to hold that 550 strike price for as long as I can, especially if it breaks above that and tries to get to 600. Any questions? Okay. Until take a look at Intel. Take a look at Intel. All right, so currently we have support here. We draw the support a little bit down. So currently Intel is testing support at $19 or $18 is where we have it at. So currently $18 is basically the floor for Intel. If it was to break below that, let's see, we have to, if it was to break below $18, the next place is probably going to come and try to test. It's going to be somewhere at about $15 is the next place that try to go and test if it was to break below that. Now, if it's rejecting this price, it's going to come and try to, if it's rejecting, excuse me, it's going to come and try to test $24 as its resistance. So if it rejects the 18 mark, the next place is going to be coming to is about $24. Looking at the indicators, RSI level is really low. Stochastic RSI level is really low. MACD is trying to point over. So this could be trying to start to increase in value. If you're looking to buy shares of this, you should probably look at hold it for the long term. Just look at the IR investor relations reports and see if this is a company that worth holding on to. Again, for this week, we look at the daily. We can see from the daily, it looks like it has room to go up. Just looking at the stochastic RSI level and where the RSI level is at. Paired with that, we just had a crossover on the MACD a few weeks ago. We could be seeing this increase. It's going to have to try to break past its current level. And if it breaks past this $19 range, if it's trending upwards, it's probably going to come and try to test somewhere up in $20 this week. So we could be seeing Intel get to about $20 this week. And then from there, if it gets to $20, can it break above and get back to 24 is what I'll be looking for. So if it's trending upwards, I'm looking to see what happens at 21. If it breaks above that, we'll probably see it get to 24. If it doesn't and it rejects 21, we'll be probably seeing it get back to about $18. And if it breaks below 18, it's going to get to about 15.
Hey, Mark.
Mhm.
Yeah, I think with the new proposed bill with the government, don't you think it's gonna go up?
Say it again.
With the new proposed bill with the government, don't you think it's gonna go up this week?
Let me see.
Yeah, because they said
Oh, I see they made a
yeah,
3.5
the US
billion
government
bill.
just give them $3.5 billion for a military contract.
Yeah, so yeah, with that deal, the news from that deal should drive it up. If it was to drive it up, I would think it would probably first try to get to 24. That would be the place that it'll first get to try to see if it tests that level. But
Okay.
yeah, with that new bill, it could drive it up. Yeah.
Yeah. Yeah. So if let's say if you're doing a long term strategy, it's gonna look maybe 18 to 18, right?
Say it again.
Say if you're doing a long term for maybe 2 weeks, we're gonna be seeing like $18, right?
Yeah,
Okay.
long term. Yeah, long term. Yeah, long term.
Okay.
24. So 18 is basically the bottom right now. So if you're holding it long term with the deal, you'll start to see increases. Yeah, slowly but surely. But 24 overall is probably where we'll be seeing it get to before it starts to try to cool down from there. All right. And I see we have.
Mark, did you see the planet Palantir in there in the gold?
Yeah. So the Planeteer, yeah, I saw the Planeteer. Hold on one second. I think we went over Planeteer just now, but I can give you a quick little
Oh,
synopsis.
I missed it. Sorry.
That's okay. Give you a quick little synopsis. Yeah, for Planeteer, we basically said around that it's currently testing the ceiling at 345, and if it was to pull back, we'll probably be seeing it try to come back and test $33. And where's my moving average? I think I got rid of my moving averages. Yeah, I did. Great. But yeah, we'll be seeing it get back to probably about 33 with a pullback. And then from the daily, when we looked at the daily, all the indicators are also in that oversold region. So the fact that it's basically at its all-time high levels, we'll probably be seeing it reject and try to get back to 33. And if it was to break above the resistance, we'll probably see it get to like 40.
Okay. Yeah, with the new deal they have with the new how do I call it? They're gonna be joining XMP 500. Yeah, I think it's gonna go up a little bit.
Yeah, I think they announced that, and it did go up a little all last week. So,
But yeah, I would be just a little. I would wait a little bit if you want to get into a trade with them, just because everything, especially even on the weekly, is basically showing that they're overbought. They're in that overbought region, so I would just be a little bit careful.
Cautious. Okay.
Yeah, just to wait for them to pull back, because that news has already been built in. The news has already been built into this price already. It already happened. So just be a little bit careful. They're testing this area. You probably want them to pull back and cool down first. Catch that RSI level when it's a little bit lower, so that you have room to the upside.
Okay, what's going on with the mining industry?
Say that again.
What's going on with the mining industry? It has been going up for quite some time this last week. Like
I'm not.
coal and all that. They have been going up for some reason. Almost all the coal industries. Like I have my bought into coal mining, COCDE. That's the ticker.
What was the ticker?
CDE. No, CDD. CD. Yeah, E. Yep, that one.
Check out the news. So it looks like rate cuts boosted precious metals is what this is saying. You can read into this. So because of rising gold prices and the rate cuts, that's basically surging
I see.
mining companies. So the rate cuts basically is what's causing the.
Cutting others. Okay, I see.
So it's increasing metals. So of course, companies that's mining for gold and silver and
They're gonna
natural resources, they're going to increase as well.
That's
All right.
maybe I better cash out now before everything goes. Because I've been looking at it. It's been going up almost for the past year. It's up like 225%.
Just keep
Yeah.
watching them, and if you like the company, again, check the
Yeah.
IR, make sure you like their investment relations, and just keep
Okay.
buying it. Yep. All right.
So, thanks.
Yep, no problem. Okay, perfect. I see we have about 10 minutes left, which is perfect. So for this week's pattern of the week, I'll make it a little easy one. We'll talk about the hammer pattern again, especially for
Okay.
new people. The hammer pattern is one of those patterns that you can look on even the minute chart and you'll probably see this pattern form every single day. So that's why I wanted to talk about it, just so that it's one of those patterns that you can always look at and try to find it. So what are hammer patterns? Hammer patterns are basically used to help you predict that the stock price is reaching the bottom and it's reaching its bottom and it's about to start to go up. So this pattern is normally going to form, or this pattern will form when you see
Mark,
the
can you
stock
share
price.
your screen?
Yep, I surely can, because let me stop presenting and then represent. Just do entire screen. All right, perfect. All right, so this pattern forms basically when the stock price is decreasing in value and it's reaching its bottom, you will see the hammer pattern form. And then this hammer pattern is going to let you know that the stock price is going up. And it's called a hammer pattern because it creates what looks like a hammer. So you can see you have this long wick or shadow that is known, and you also have the body. The body is going to form in this rectangle shape that you see here, and it looks like a hammer. And this hammer pattern could be that candlestick can be either green or red. It doesn't matter. And it doesn't matter if the wick is at the top or the bottom. Sometimes you might see that the wick is at the very top. Is at the this black shadow that you see here, the black wick, maybe at the very top of the pattern, and the body is at the bottom. It doesn't matter, as long as you see this shape form. It's dictating essentially that the stock price is reaching its bottom and it's about to turn around and start to go up. This pattern is also used, it's good to use with the other indicators. So if you're seeing like your RSI level is pointing up and it looks like it's going up, stochastic and the MACDs are pointing up, and you see this pattern form, that's a good indication that you are at the bottom. And I'll show you a little example. So here you can see price was decreasing in value, and it created this hammer pattern. So this hammer pattern is basically indicating to you like, hey, it looks like this stock that was once going down is finding this floor. and it's about to turn around. Now, when you see this pattern form, you don't want to trade it when you're seeing this pattern form. You want to wait for confirmation. You don't want to just get in right here, because a lot of times with the hammer pattern, it may continue to trend down a little bit more before it starts to go up. So if you see the hammer pattern form, you wait for an indication, which is going to be a green candlestick to the upside before you start to get in. So once this green candlestick happens and it's a nice pop up, you can then start to get into that trade. Any questions on the hammer pattern?
No. Okay, thanks for that knowledge. I like it.
Yes, no worries at all.
Mark, what's the difference between that and the spinning top?
Yeah, so the spinning top basically happens at the very top of the stock price. So the spinning top is just the inverse of the hammer pattern. So you see spinning tops happen at the top of the stock. So the stock price was first going up in value, as you can see here. Price is increasing. And then you'll see, like right here, you can confirm that this is a spinning top potentially, or a hammer pattern. It's just at the top, and then it starts to decrease from there. So that's how you can distinguish the two. So hammer patterns happen at the bottom when the stock price has been decreasing. Spinning tops happen when the stock price has been increasing and it's reaching its resistance. It's reaching its ceiling and it's about to pull back. Good question. It's a good question. Did that answer it for you?
Yes, thanks.
Mhm.
So there would never be a hammer pattern at the top.
No, yes, correct, because that's the spinning top. So
Got
I mean, it is a hammer pattern at the top, but it's just called something different. It's a spinning top.
Okay, got it.
All right. Any other questions? All right, perfect. All right. So with that, I'm going to hand it back off to Ladarius, and he can close us out. We're just about up at 7:55, so we're perfect on timing. Thank y'all.
I appreciate that, Mark. Let me stop the recording here.